Okay, hello everybody. Welcome to Korean Atlanta Mentorship, aka the Velocity Banking Cult. And we're just going to do another Velocity Banking review for today. So if you didn't know, it's actually 11:50 p.m. right now. So if you just click this video at this hour and you want to study Velocity Banking, maybe it's a sign that you're in a cult. In fact, I recently got a comment, or actually from yesterday, about someone talking about working with broke nurses, and she was like, I just don't understand why they don't have money. For example, at this job, we are making $800 to $1,000 a day for 16 hours, which most of us do on a daily basis. Everyone here has the opportunity to work those hours every day. Also, we have daily pay here. I just don't get it. I've tried several times to introduce my colleagues to Velocity Banking, and no one seems interested. It's definitely the priorities here. The parking lot is full of luxury cars. People spend thousands of trying to look good, lavish trips. I'm always the one they're asking to borrow money if they would listen and join the Velocity Banking cult. I'm currently on a 16-hour night day shift while others are up partying at this Saturday night. So yes, we're trying to recruit more members into this cult where all we talk about is putting money into a line of credit, and people go crazy over this. I get hater comments. I recently got more hater comments about, like, man, take, you know, at eight, you forgot to do this. It's like, if you replace the 6.5% auto loan with a 9% loan, you're increasing the cost of interest by 50%. Cash flow index is a terrible way, and I'm just like, whatever, man. And that's how you know I'm a cult leader, because when the criticism is there, I just deflect it. Paching, paching. That's how you know I'm a cult leader. Anyways, let's take a look at this. This is a 10% HELOC. This is actually my statement, HELOC statement. Or if you go into the website, you could see how much interest you paid and principal. So basically, I dumped all my money into the HELOC, and I quote, practice what I preach. Get it? That's what a cult leader says. Anyways, so here we have principal paid 127,000, and I only paid about $1,000 of interest. So if you just do the math, that's like 0.9% of interest paid. So again, I guess nuance doesn't really matter to people, because they just look at this number and, oh my goodness, 10% APR. Like, what are you doing? Like, Velocity Banking, because we're a cult, right? Okay. Well, let's just do another review of Velocity Banking. So, what is Velocity Banking? It is just me doing a spreadsheet and making some money off of the YouTubes. No, it is a debt payoff strategy using a line of credit as your main operating account. So, only two things to do Velocity Banking. Number one is a budget, and then number two is a line of credit as a main operating account. So, what is a line of credit? All it is a financial tool where you could borrow money, pay back, and then use it over and over again, right? And so, the only line of credit that the vast majority of the population is familiar with is a credit card. But credit cards have both their pros and their cons. But the biggest con of a credit card is the inflexibility, meaning you can't use it to pay everything, right? Whereas with the personal home equity line of credit, you can use it to pay everything. And so here we have a sample budget: $5,000 of income, $3,700 of expenses, 1,300 left over, which is pretty good, right? And I always say that, like, hey, if you got more than $400 left in savings, you've pretty much beaten 90 what percent of the population, right? And I don't know if you ever heard the statistics that half of the people who make six figures are living paycheck to paycheck, probably including nurses too. I'm guessing most of the nurses out there make a lot more than me, especially if you're making a grand for a 16-hour shift. Now, would I ever work a 16-hour shift? Probably not, but that's how you know I'm a weak sauce person, because I'm pretty lazy. So, so all right, yeah. So we got a budget, and let's add all of this debt up. So we have 16K of credit card debt, and then how much is the rest? So 16 plus 22 plus 225, and then so 263K of total debt, right? Hopefully I did it right. Last time I did this, I kind of calculated it wrong. But again, as a good cult leader, I just kind of ignore criticism and just keep talking about how you got to do this and put the money in the line of credit. And I don't know, for some reason, people like act like it's like the end of the world when you do that. But again, let me just kind of show this here. I have a 10% APR in my line of credit, my home equity line of credit, and how much interest did I pay for the entire year up to now? Well, actually, this is a little bit outdated by a month or so. 0.9%. Whoop-de-doo, right? But for whatever reason, it makes them nuts, right? Like, oh my goodness, like I can't believe you're doing this, and it's just like, okay, we have actual real problems in this country, but nobody cares about that. Anyways, so let's go ahead and do the velocity banking portion, and we don't need a huge line of credit. Ideally, we would probably want one that can kind of handle the credit cards, but really, we don't even need that. Although a line of credit that is big as possible is the best line of credit. But I got all oodles and oodles of lines of credit. Look at this, 15 grand here, 280 here. I'm gonna make another video about how I got over $500,000 lines of credit. But here's the thing, people are like, I need a payoff plan. I need a plan to get a line of credit. Oh, am I even the right thing? Okay, I need a plan to get a line of credit. I'm like, dude, I gave you the plan, right? What's the secret plan? Is that banks don't lend money to people who need it, so you need to get it before you ever need it. Secret plan, right? Like it's not that complicated, and plus they don't lend to poor people, and people get really offended by that. But there's a reason why they have the tallest buildings in America, in downtown, because they don't deal with poor people. Like 90% of the people in this country can't even get a mortgage. And so their ideal customer is someone who makes a lot of money and is just kind of a little bit bad at managing it, right? They don't want, like, they're like pharmaceutical companies. Pharmaceutical companies don't want people who are going to die tomorrow. You know what I mean? Like, they want people who are not so healthy, who shop at Whole Foods and drink organic juices every single day, because you can't sell pills to that person. And you can't, like, you don't want a person who's going to die tomorrow because you can't sell pills to that person. Same thing with banks. What's their business? Debt, right? So can you lend money to people who are poor? No, because you're not going to get your money back. And then do you want to really lend to people who are super responsible? Probably not. I mean, it's better than, let's say, lending to a poor person, right? But there's also risk in getting your money back too quickly because the whole point of it is just to gain interest over time, right? So let's go ahead and do this. So we're going to make sure that we're going to follow the exact opposite of Dave Ramsey's step one, which is save $1,000 and no thank you. And then we're also going to calculate something called cash flow, right? Cash flow, which is just income minus expenses, which looks the same as our savings before we do step one, okay? Before we do step one, which is putting some of our debt into the line of credit, and the easiest ones is the credit card debt, right? So let's go ahead and do this. And what limit shall we have? I don't know. Let's do 30,000 for today. 30,000. And if we move these credit cards, it's going to be 16,000. So let's go ahead and write that down. 16. Is that right? 16? Yeah, 9, 7, 16. And then by simply moving these two credit cards into the line of credit, guess what happens to these? Wow, we went from 1,300 to 1,859 in one swoop, right? That was pretty sweet. Okay, so now let's go ahead and write the correct cash flow, 1859.19. All right, and then now what we do is we just copy and paste these formulas. And so Control C, Control V, and then we see by month 9, whoa, it got paid off pretty quickly, less than a year. $16,000 credit card balance. So let's go ahead and write that right here. So 9 months, 16K. It's pretty sweet, right? For some people, that's like a monumental achievement, because I don't know if you ever looked on YouTube, but videos that talk about how I paid off 10K of credit card, I think it's 10,000 under a year. They get a huge amount of views because most people are broke. They're broke as a joke, right? And then, so what we can do now is we're going to pay off the auto loan and the mortgage, and we usually pay off the auto loan first because it provides us more cash flow compared to this one right here. So if we pay off $22,000, we get $430 back, but we need to pay off $225,000 in order to get $1,000 back, right? So we should pay this off simply because we get more bang for a buck in terms of cash flow. So let's go ahead and do this and figure out 9 months. And did I screw this up? All right, so let me go here. Okay, so month 9, what's our balance of the loans? So it's 19 grand. And usually if you take a look here, cash flow index, it says anything under 50 you should pay off. I always like this number to be under 40 or around 30. But I think 40 should be fine. So let's go ahead and move this loan into the line of credit to get that 400 something dollars of cash flow back, right? So let me go ahead and move it right here, Control V, and then I'm going to do this, and then so we're going to add plus 193,19136.93, bam, and then guess what? Simply by moving that auto loan 0, now it's 2289.65. So let's go ahead and do that, minus 2289.65. Okay, so let's see how long it takes us to pay off this auto loan, right? And then we can see right here, it takes about 18 months. Okay, awesome, 18 months. All right, so now 18 months to pay off the auto loan. And so it's another 9 months. And that would be 16 plus 22, which I think would be 38K if I'm doing my math correctly. All right, so next one is the mortgage. So let's see at 18 months what the mortgage balance is. This one's paid off, but take a look at this. It's about $218,000, right? And so we have two options when it comes to paying off the mortgage. One, direct extra payments, or we could just chop it up into little pieces in what we call chunking. And so I told the story in the last video about the nurse that I know. And basically, I know she has savings, right? And I said, listen, if you have savings at 0.001% and you know you have debt that's greater than 3%, why haven't you applied your savings to debt? And she already knew the answer because we all know the answer. If we do direct extra payments, that money is gone. And then if we use our line of credit as a backup, welcome to segregation of income world. And if you don't know what I mean, take a look at this. Are you overwhelmed by looking at this? This is where segregation of income takes you. So if you don't know what I mean by that, go watch any of the other videos about segregation of income in this channel. So again, if you can do direct extra payments, go for it. But most people won't do it even if they have the extra money, right? So we have to kind of take a look at human behavior. So the other way, alternative way that makes it easy to pay off is just by moving a piece of the loan to the cash flow. Piece of the loan to the line of credit and then paying it off, put your entire paycheck in then with your cash flow. So let me just kind of go back here. So let's say I move $10,000 of a loan. So let's assume, actually, what's the current balance? So that'll be 208. Let's say I move $10,000 of a loan into the line of credit. Okay. How long will it take? Well, let's just take a quick look, quick calculation. Plus 10,000, right? And then 1, 2, 3, about 4 months, 5 months. 1, 2, 3, 4. I'll say 4 or 5 months. But then you take a look at the loan calculator, right? So after 5 months, so let's just do this. This is 23 months. Only $2,000 of the principal got chipped off, right? So let me just kind of go here. Whereas we get tick off $10,000 of the principal doing it this way, whereas we just keep making that monthly payment and doing it the way that the bank wants you to, and then also having just a savings account on hand, you're not gonna do it, right? Like people have the default option of doing extra payments, and they just don't do it. And this is where the cult aspect of everything comes from, where you just got to wake up and tell yourself, okay, my line of credit is my main operating account, right? So actually, let me just kind of go back here again. So I think we're at month 18, right? So let me redo this. And then we'll just start off at month 18. And okay. And so now let's just go ahead and put this in our Velocity Banking calculator. And what's cool about this is that in the Velocity Banking calculator, you just type in stuff and then it just spits out a number, right? So it just spits out a number. It tells you how long it's going to take off to pay off your loan, okay? And let me just pull it up right here, which is right here. Okay, so now I just gotta type it in. So what's the current balance? 218,465. 218,465 point 69. Okay, and then I think the rest of the loan details are the same. I think the only thing that's different is the income. So let me just quickly take a look at my other screen. So income is 5,000, right? So we are just using lower numbers because we have less debt, especially with the credit cards. 5,000, and then our food, gas, insurance is 1,700 in this case. So let's take a look here. Well, blam, 6.2 years. That's pretty good, right? 6.2 years. And let me see if what the difference between 6,500 and then increasing this chunk amount is 10,000. Does it make that big of a difference? Look, it didn't even make that big of a difference. 6.3, 6.2. Okay. So we'll just say 6.2 years. And let me just kind of go in here and wait a minute. It's really late right now, and the cult leader can't even handle the cult's demands of reviewing velocity banking at midnight. All right, so now let me just go here. 6.2 years. So 6.2 years. So 6.2 plus 18 divided by 12, and then that will tell us the in total time payoff. So that'll be 7.7 years. Wow, 7.7 years. And okay, so 38 plus 220. Oh yeah, 263K of debt. And then debt free, right? And then this is going to go to zero. And then blah blam. Now we got semi-rich people problems where we got an extra $3,300 a month. And then we're good and we're debt free. And now it's time to do something, make more money, invest, and who knows what. All right. So this is your daily velocity banking review. And so again, invite other people to join our cult, our group, by clicking the Google form link below. Now there is a cost to it because we're just a third party, what we call independent contracted marketer of educational products. So we do distribute those. That's how this channel is quote funded, even though this is just kind of like I don't know if hobby's the right word, but because you can't, if the IRS finds out this is hobby, they'll be like, that's a little sus, right? So it's not a hobby. So let me make that clear. But again, not only do we study velocity banking, we study other things like real estate investing, financial literacy, and all that other good stuff. But there is a cost to it if you click the Google form link below. And again, even other people see the need to invite people to this cult because there are too many broke people out there, even the rich broke people. I've even had people send me their financial spreadsheets where it's like $10,000 a month of income and they're still broke. I'm like, what? Say what? You're not even a nurse and you're broke and rich? How's that working out? Oh no. All right. Well, that's it for today. So have a great day, everybody. And again, I'm pretty sure that if you saw the thumbnail, it says clickbait. So this is not a cult, but hopefully you realize that. And if not, it's all good because sometimes, people create organizations and entities that are sometimes out of the founder's control. I don't know if you knew about that phenomenon. That's something I got to go over in another video. But that's it for today. So have a great day, and we will speak next time.